Good morning, welcome to CATEX TV. My name is Frank Fortunato. Today is Wednesday, September 25th, 2013. If you wish to watch the broadcast and you're a listener of Radio Newark, please go to www.catex.com. Big things that didn't happen yesterday: a meeting between President Obama and President Rouhani of Iran at the United Nations. Both sides made rather conciliatory speeches toward each other, but no meeting occurred. The Israelis, of course, still are claiming that all of this is nothing but a charade, and Iran continues with its nuclear program. Meanwhile, the death toll from Pakistan's earthquake yesterday has now increased to about 330 people. Fortunately, the 7.7 earthquake struck in a relatively unpopulated area, Baluchistan. It was a very strong quake. It ended up actually creating a small island which emerged from the Arabian Sea just off the Pakistani coast. It's expected that the death toll is going to continue to rise. There was some news from Lloyd's yesterday. Apparently the franchise board met and two new syndicates seem to have been given the go-ahead. The first is a syndicate 1729 that's being funneled up in money by U.S. specialty insurer ProAssurance. ProAssurance has made its name in the area of medical professional liability lines. They're going to be providing 51% of the funding. The other 49% of the funding is going to come from third-party capital, primarily Lloyd's names. It's unknown whether any of that capital is going to be coming from hedge funds or other insurance-linked security vehicles. Meanwhile, former Hiscox executive David Bruce received an in-principle approval from Lloyd's to launch Acapella Syndicate. That would be number 2014. That's going to be on January 1st. Acapella had started life back in 2012 as a sub-syndicate of Ironshore's managing agency Pembroke. It's unknown, actually I should say, it is going to be a standalone syndicate next year with capital apparently exclusively provided by Lloyd's names. Again, it's not known whether those are going to be individual names, corporate names, pension fund names, etc., etc. This is all part of what's going on now at Lloyd's and elsewhere. In a senior executive reshuffle, the first move of which we reported yesterday, Aon had named Eric Anderson head of AonBenfield Reinsurance. They have now added Mike O'Connor, who's going to lead Aon Risk Solutions Unit. Both will report to Steve McGill. He's the group president of Aon and the chair and the CEO of the company's Risk Solutions segment. He's based in London. They've also made another move. Brian Earhart is going to become CEO of AonBenfield in the Americas. Aon stock has rallied 36% this year, compared with a 20% advance in the Standard & Poor's 500. Marsh McLennan is the largest insurance broker by market value still. Aon's number 2. Well, Stephen Cohen at SAC Capital Advisors may be getting close to getting out of the woods, perhaps. SAC and federal prosecutors apparently have begun talks to settle criminal insider trading charges against the firm. The government is seeking a guilty plea and a financial penalty of as much as $2 billion. Apparently, Mr. Cohen, who also faces civil action filed by regulators, is trying to resolve both cases simultaneously, the case against him personally and the case against his company. Many expected SAC would have collapsed after the criminal charges were filed, yet J.P. Morgan Chase and Goldman Sachs continue to trade with the firm, providing financing for its operations. The Spanish train crash on July 24th that was the result of a high-speed turn that the driver should have slowed down about 50% for, has widened insofar as the investigation is concerned. The judge has now named 22 rail infrastructure company officials as suspects. The crash killed 79 people. The name of the infrastructure company is ADIF, A-D-I-F. The judge has named the company's 3 most recent presidents, former board members, senior managers, and others. They are all now named as suspects and have to come in for questioning. The statement said potentially others from ADIF will be treated as suspects while the judge tries to determine whether the track was safe. This is above and beyond, of course, the driver's own admission that he was driving too fast. More trouble at Tower Group. Now the chief underwriting officer has left, Gary Mayer, tendered his resignation today. It's going to be effective on the 4th of October. Mayer has been the chief underwriting officer at Tower since June of '05. New York Life Insurance is one of the largest American life insurance companies owned by policyholders. It's still a mutual. They fired the chief executive officer and a high executive in a company that they own called Madison Capital Funding. The reason, violating policies tied to personal investments. Trevor Clark, who's the CEO, and Christopher Williams, the senior managing director at the unit, were dismissed for, quote, violating company policies pertaining to personal investments and business activities. According to New York Life, our company's rules are strict with regard to these disclosures and activities, so we can continue to maintain our highest integrity and performance. Both Clark and Williams apparently had been suspended amid a company probe. This is according to insiders. Attempts to reach the men were not successful through phone numbers. Apparently the company probe was resolved and they have been fired. Madison Capital targets companies with stable profits and at least $3.5 million of earnings before tax. The unit offers senior loans and equity co-investments in industries such as manufacturing and distribution, apparently part of New York Life's investment portfolio, both for New York Life's own investments as well as for its customers to choose for annuities. No longer, or at least not with those two men. That's the news for today. If we have any breaking news, we'll come back and tell you. Thank you for watching, and we'll see you.